Hi, good evening, Savorites. How are you? Happy to have you to host this webinar. Here we'll be discussing MRI. MRI is monthly rental income tax, which is filed on receiving rent from residential properties. And before we go further ahead, I'd like for us to thank God for the opportunity to be here and to learn just from each other so we can bow our heads. Let's pray. Father, in the mighty name of Jesus Christ, we thank you for this opportunity. We thank you for the gift of life and for the gift of one another. Our dear Heavenly Father, we ask you to take us through as we teach one another. May you be our guide and may you be our shield. Be with us till the end. In Jesus' name we do pray, trusting and believing. Amen.
Amen.
Yes, so now we can begin. I can see Janet is online. Dorian, I can see you. Jacqueline Mwangi, I can see you. You're saying this will be lit. I can see you, Candy. I can see Sam. I can see you, Janet. So today we'll be speaking about MRI, as I had mentioned, and in Savo, if you know us, you know we are very passionate about our investors' financial independence journey. And basically, to the end is if you're able to receive your rental income tax, are you filing your returns to the government? Is KRA able to see, like, are you fulfilling your obligation as an investor, so to the government? So today we just want to take you through what MRI is, who's supposed to file, who is eligible for filing of tax, why should you file, and what are, for example, if you do not file, what are the penalties you incur as an individual? If you have your properties under a company that is corporate, what are your penalties, and how we can assist you in Savo, because we are very passionate about you and we want to see you to the end. So today I am joined by the very able Karen. Karen does receivables in Savo. She is head of receivables. Basically, she's the one who receives your money. She's the one who knows how your accounts are doing. And basically, she's just the one who advises you why you should pay this amount and pay within this period. And then also with us, we have Sammy. Sammy is a tax expert who is going to take us through, who is going to answer most of our questions, helped by Karen, and then we're just going to understand the why behind MRI, the why behind tax, and how it is good for our investment journey. Yeah, so right now on our screens we have a question that is running. Do you receive your rental income tax? It's just a survey, so it's good for you to fill so that we're able to see. Yeah. So I think now I can hand it over to Karen to begin.
Thank you, Alice. This is a great opportunity to just be able to walk this journey with all of you and actually take you and inform you more about monthly rental income. I'd like Sammy to say a word and say hi to everyone, so before we continue. Sammy? Sammy, we can't hear you.
Karen, please confirm that you can now hear me.
Yes, that's okay.
Okay, thank you. As mentioned earlier, my name is Sammy Chirchir. I'm a tax consultant at Viva Africa Consulting, and we work closely with Savo City. So today, it's a pleasure to join them and just enlighten all of us on the issue of monthly rental income tax and how we can be of assistance as Savo and also as a tax consultants on how we can minimize our taxes and also mitigate any tax liabilities that might arise because of non-compliance. So I look forward to an interactive session.
Thank you.
Thanks, Karen.
Thank you, Sammy, for being available and also just for the knowledge that you're here to offer. I don't know. What do we begin with?
I think we just begin with just introduction of what MRI is to detail, because I've just brushed over. I'm just able to tell them it is the tax you pay every month for receiving rental income. But can we just go over it and be able to tell them who is eligible? When exactly do you pay it?
Okay. So I'll just take you over to like a bit of the slides that we have for the presentation. So of course, monthly rental income tax, as you say, as an investment as an investor you come in, buy an investment, which is a house, and
Yes.
of course for us in Savo we sell passive income.
Yes,
Yeah.
yes, yes.
So for us it's the passiveness of the investment. It means every single month you're earning something from your tenant.
Yes.
But what does the government take from you at the end of the day? Yeah, because for every income that even as an individual or a company
Yeah.
that you earn, there's something that you have to pay to the government. It's an obligation.
Yeah,
as a
basically.
citizen.
Yes.
Yeah, so monthly rental income tax is basically just tax that you pay monthly. Of course, there's a cap of the people who are supposed to pay MRI. Not everyone pays MRI.
Yes.
Yeah. Yeah, and of course it's different for whether is your space commercial, is it residential?
Yes.
Yeah, it's paid monthly, just like like the word monthly rental income tax, and it's paid on the 20th of every month, of every other month. So if it's February, you file for it in March, by March 20th.
Okay, so if it is the rent you received for January, you have to file it before the 20th of February, the
Yes.
next consecutive month in that year.
Yes.
Oh, that's okay. That's very informative. Also, I have a question. So I have a unit, a unit that earns me an amount, let's say 12,000 every month, but there is a month within the year that I did not receive rental income. Am I required to declare that I did not have a tenant and file a nil return, or how do I go about it? Is it a mandatory monthly income that I need to file and pay for?
So MRI, basically when you learn about MRI, you get to learn that it's an easier way of filing for your rental income tax. Yeah, it is of course cheaper. It's convenient because it's per month when you earn it.
Yeah.
And then it's not easy for you to forget, because then you just establish the monthly discipline of being able to do it. So first, maybe what we need to clarify is not everyone is within the bracket of MRI. Yeah.
Yes.
If you're earning 12,000 a month, you're not within the bracket.
Yes.
So for the people who are within the bracket, those are the people who are earning 288,000 a year. That's 24,000 a month.
Yes.
And 15 million a year. Yeah, it comes to about
1.25
per month.
Yes.
Yeah. So of course you pay 10% of that gross tax. In the event that you're registered for MRI, within the year you're projected to get rent of 288.
Yes.
But like tenancy can
fluctuate.
Yeah,
Anything
can fluctuate.
Can happen.
Anything can happen.
Yeah.
Yeah, if that happens, then that means you file a nil return in that month because you're already registered for MRI.
Thank you for making it not quite ambiguous. It's good that you broken it down and you're able to say that if I make less than 24,000 in a month, I am not eligible to file for my MRI return. So what happens to me who makes less than 24,000? What does the government expect of me? What do I need to give back to KRA? Or what do I need to do?
Maybe Sammy, just to loop you into the conversation, maybe you could answer that question.
Okay. Thanks, Karen. I hope you can hear me well.
Yes, we can.
So basically, residential rental income tax is a simplified regime whereby the KRA was just trying to increase the net bracket, because it is a tax that was introduced in 2016, and the aim is just to make tax filing easy for everyone, so that you can do at the comfort of your home. You don't need to get an expert. It's a very simplified regime. Therefore, they were targeting a very specific group of individuals and companies, resident companies. The thing that I need to bring to your attention is for MRI, monthly rental income tax, it's only the residents who qualify for this regime. So it's only the Kenyan tax resident persons that are eligible to take advantage of it. So if you fall within the category that Karen has mentioned, 288 to 15 million, this was amended by the Finance Act 2020. So previously it was between 144,000 and 10 million. Yes. So if you fall in these categories, now the current one is now 288 and 15 million. If you fall within that category, you automatically fall under the MRI regime as long as you are tax resident in Kenya. You fall automatically there. So the moment you are not in that bracket, that now raises another question, that now you go back to the old regime whereby you are not in the MRI regime, you go back to the old regime whereby you are entitled to declaring your revenue, you deduct your expenses, and now you declare under the normal regime now whereby you get your revenue, deduct expenses. Then now that issue, that brings more difficulties because it takes you now to the other provisions of the income tax, like section 12 of the income tax, which provides for the payment of installment taxes. So the moment you are now in the old regime, you need to consider whether you are eligible for installment taxes, which is payable on a quarterly basis, which is something that might be a bit cumbersome. So to make it clear, just once you are not in the MRI regime, you go back to the default regime, which is now the normal one that most business operates in. Yeah.
Thank you.
Karen?
Thank you, Sammy. That's quite informative. So, Karen, you have mentioned that it is between 288,000 annually and 15 million annually. So my question will be, on what amount, if I receive 24,000, because that is the minimum that I need to receive for me to file for my MRI. Mm-hmm. If I receive 24,000, on what amount is the 10% charged? So do I expense, don't I, what do I do?
Okay, so if you are if you've decided to take the MRI route, then that means you will pay on your gross rent. So if you're earning 24, you pay 10% of the 24. Mm-hmm. Yes. If you are not within the bracket, then that means it's at the end of the year with your annual taxes. Mm-hmm. So of course you will expense. Yeah. You'll do all the expensing and all that, mm-hmm. and then file it on 30. Yeah.
What? So if I am within the bracket, I do not expense whatever amount that I needed to get that rent, whatever amount I used, be it service charge, be it management fee, anything that I used to acquire that rent, be it I paid a bill for a tenant, be it, I can't.
Yes, so it has to be on the gross tax. You're earning 24K,
uh-huh.
It should be 24K.
Okay. That is quite informative. Yeah. Okay, to go to our live chat, I can't see your questions coming in, guys. I need to see that so that we're able, it guides our Q&A session. So kindly keep your questions coming in so that it gives us a flow. It gives us a flow and a quick and just better understanding of the whole topic. So I bet my next question would be, okay, like tell us, if I do not file, if I decide or if I forget, then let's say it is past the 20th of the month and I have not filed returns, I have not even declared anything that I earned for in terms of rental income for January of 2022. What do I do? What happens to me as an investor? Yeah.
Okay. Okay, so just as you said, it's payable on or before the 20th of the next month.
Yes,
yeah?
Yes.
So if it's rent for January, mm-hmm. then you pay for it on or before the 20th of February.
Yes.
Yeah. Uh-huh. So of course the penalties, like with taxes, that's a problem.
Yeah.
The moment you commit yourself, it is a forever commitment.
You need to do it.
You need to do it.
Yes.
Yeah.
Uh-huh.
So of course there's penalties for submission, mm-hmm. and there's also penalty for late payment.
Yes.
Yeah. Mm-hmm. So I know most of us here, like most of our investors, would be individuals, but we also think some of you have your investments under a company.
Yeah.
That's why we'll also include like what penalty is attracted is attracted if you are a corporate.
Corporate, yeah.
Yeah. Just as the slides are saying. So if you haven't filed your taxes by the 20th, so say it's the 22nd, maybe you forgot, maybe
Something happened, life happened.
Yeah. And it's the 22nd and you have not filed, then that means you are subject to getting a penalty in your account. Yeah. So you get the higher of 2,000 or 5% of your tax due as an individual. So say for example, you're supposed your rent, the total gross rent that you earn is 24,000, meaning 10% of it is 2,400.
Yes.
If you have not paid it, so it's a calculation. So KRA calculates, the systems calculate and they decide. So is 5% more or is 2,000 more? If it's less than, if the 5% is less than 2,000, then automatically the penalty becomes 2,000.
2,000, yes.
Something that confuses many. So this penalty is for that period.
Yeah.
If it's January, from 1st to 31st of January, qualifies as a period on its own. So the penalties that you will get for that month are for that month.
Okay.
February is another period on its own. Yeah.
Okay.
Does that make sense?
Yes.
So now for the corporates now it's 20,000 or 5% of the tax due. So say maybe you're a company that has say 15 units.
Yes.
15 units of 10,000, you're earning 150. So if they do 5% of 150 and it's higher than the 20,000, then that's what they go for as
opposed to the 20,000.
Yeah, and then again let's remember KRA. Yeah,
KRA is just those people. They'll come looking for you.
Yeah.
So I have a question. So I am earning monthly rent, but then I decide, can I declare within the month but pay quarterly? Can I file? Can I submit but pay later? What if I can, why not go that route? Why is it more advisable to go the monthly way? What's the constraint with deciding that I want to submit my rent, but I want to do it monthly, but I want to pay quarterly, semi-annually, or at the end of the year as I do my other taxes?
Sami, over to you.
Okay, thanks, Karen. So for the residential rental income tax, the obligation basically is more of you pay and submit on a monthly basis. You submit the return and make the payment on a monthly basis. However, there are unique cases. For instance, whereby your tenancy agreements provide that you get the rental income on a quarterly basis, semi-annually basis. So for instance, and we know for rental, it's normally payable in advance. So if you get your rent income on a quarterly basis, so let's assume a January to December period, you get your rental income for the first quarter in January. You get 2 million, or even just put a number. So what you are required basically is you are required to you've received your rental income in January.
Yes.
For the first 3 months. So what you could do basically is you declare it in January, the whole income, and you pay the whole tax. Then when it comes to February and March, you just file nil returns with no payments. Because when the revenue authority comes, you can substantiate that by providing the lease agreement, which provides for quarterly payments, and you can demonstrate that you receive on a quarterly and you've accounted for it. So I think it's a case by case depending on the KRA is a bit flexible on this one, depending on the tenancy agreement or the lease agreement. So I think it's a case by case, but from a practical perspective, we've encountered quarterly basis mostly and monthly. So I think one of the two would suffice as long as you can substantiate your case and you be consistent so that you don't pay in the first quarter quarterly, then you go to the second quarter, you pay monthly. So you need to be very consistent to adhere with the lease agreement.
Okay, Sami, I think I have a question on the same. What happens if I do not have supporting document, if I do not have a tenancy agreement, but I have just decided out of maybe it is just my desire to do it differently, does it mean that I am eligible for a penalty because I have not done it monthly and I do not have any supporting documents?
So what happens? The first instance, I think I don't know if I answered your question well. The first one was basically where you file the returns monthly, but you don't make the payment. In that case, you will be filing on time, so there is no filing penalty. But the problem is you are not making payment, so you'll be incurring late payment penalties, which is first 5% of the tax payable under the 5% of the tax payable, and a further simple interest of 1% per month. So that's the challenge. But in the event you are paying, you are filing and paying, but it's just that you are being inconsistent. You are filing on a monthly basis. Sometimes you are going on a quarterly basis. KRA will pick that up very easily because they will see you are not consistent with your payments and your filings. And when they will come, they will need a justification as to why this time you are filing quarterly, this time you are filing monthly. And for KRA, as if you are deferring the payments of the taxes, even if you are making the correct payment but you are deferring to a later date, for them that they will not agree to that position because for them they would prefer to collect early. So if they can see you can pay January, they will not accept you defer until March unless your lease agreement provides for that. So I think there needs to be a justification with the mode of payment. Because for instance, they can look at your bank statement, they will see you are receiving rent in every month. So they will expect the declarations to be monthly. So in addition to the agreement, the bank statement will also explain. If the agreement says quarterly but you're receiving the income monthly, that one you need to also evaluate. So I think it's more of the substance of a form, the actual reality of what is happening. It just requires honesty. Yeah.
Okay, thank you, Sammy.
Yeah. So Karen, I think basically we're just telling our investors they need to have discipline, which is Savo's first core value. They need to know, they need to do it, to be consistent in doing it and do it monthly so that they do not incur extra charges.
Yeah.
Just for clarity purposes, my question will be, so me as an individual, we've already said you cannot expense, you just pay on the gross. So for these people who in Savo, we encourage our investors to reinvest. So I have a unit, let's say in a previous project, in the early projects, for example, 90 degrees, and then I have now picked a unit in an ongoing project, for example, Step Up. So my rent doesn't directly come into my bank account. Just for clarity purposes, the people who use their rental income to help them finance their investment journey, basically. So my rent is going to Skyworks, let's say Step Up. So should I pay rent? Should I pay the MRI? Sorry.
Depends. Okay. Who's earning that?
Yeah, who's earning the money? It's still me. Yes.
So if you are still earning the income, then you are supposed to pay your MRI.
Yeah. So I think it is clear. So even if the money is not coming directly to your bank account, it is helping you finance your other things, your other modes of investments with us or with other people.
Yes.
You kindly need to file your MRI taxes.
Yes.
Yeah. So I'm still looking at our live chat. Kidogo iko chini. I can't see your questions. I can't see your comments. Kindly drop your questions and your comments as this will aid the discussion that we have now. So for also for clarity purposes, I am not within the bracket. So I earn more than 15 million or I earn below. As I am declaring or filing my other tax, as I'm doing my other tax obligations at the end of the year. So how much is the percentage of rental income tax at the end of the year?
Sammy, over to you.
Thanks, Karen. In that case, basically, where you are not within the brackets of the MRI regime, you will fall under what we call the ordinary regime. So you will have your rental income at the end of the year. You get the income, the gross revenue, you deduct expenses, then you arrive at the taxable profit. So you'll basically prepare your normal tax computations. But one thing that you need to remember, under the Income Tax Act, there's a provision that provides for different sources of income. So for instance, you have rental income, and on the other side, you have your own consultancy. You're doing a consultancy, you are a consultant. So you have your own professional fees or consultancy. So those are two different sources of income. So you cannot take, for instance, let's say your consultancy is in a loss, you will not be allowed to take that loss and deduct against the rental income. So that's another thing that you just need to be keen. But just be clear and confirm the other question is that you will do the normal regime where you get your income, less expenses, arrive at the taxable profit, but you just need to remember the issue of different sources of income. Yeah, I hope that's clear.
Yeah, I think that's a very good point to bring up, because other people would, like you're doing your other business, you have your rental income, and you want to combine all that together, whatever expenses were here, so that they all net off and you pay.
Yeah.
That doesn't work. Yeah.
This is very informative. I think so. It is very informative in terms of I just know where I stand in terms of my investment. If I know this is what Savo expects from me, this is what I expect from you as Savo, since I have invested with you, I'm also able to know what the government really does expect from me as an investor. Yes, I head over to the comments. A minute. I still can't see your questions. Let me check from my end. I still can't see your questions, and I'm waiting for the same to aid in this discussion. Still can't see your questions. Kindly keep them coming in. So Karen, you have been doing accounts for investors for a very long time now. And do in your assessment, based on the questions that they ask you, based on the conversations that you have on tax, do you think that investors are quite aware about MRI? Do they do it? What are the conversations that you have had, basically?
I think as Savo, you believe that if you're getting into an investment, you know everything that's required of you.
Yes.
And that's why I feel like this is a very good initiative for us to just start these conversations, because, you might think you know everything, but there are just things that maybe you have missed, or you forgot, or, or someone, or the person who you're consulting with just didn't tell you. Something like that. So others know, others don't.
Yes.
But it's also dependent on what knowledge are you coming into it with.
Yes. Okay, that really does make sense. So Karen is here to assist. Karen, you offer yourself. So I head over to YouTube. I can see a question. And they're asking what do I expense in reference to the old regime? What am I allowed to expense? If I am not willing to do MRI, what am I allowed to expense in the old regime?
Sammy, correct me if I'm wrong, that should be every expense related to the income that you're earning. So say for example, and Sammy, you're free to just loop in at whatever moment. But say you're earning 24,000. Yes. Actually 12,000 a month. So that's 144 by the end of the year. Maybe you paid management fees, you paid commission at some point in the year. So those are like agency fees.
Yes.
You're paying service charge every month.
Yes.
That income that you got, maybe something happened to the house, and you had to repair it.
Yes.
And the cost was coming out of pocket.
Yes.
All those things are all expenses that you can expense. That is if you're going in the old regime. Yeah. Sammy, am I right?
Okay, I can see our investor here, Frederick Onferio. Hi, Frederick. How are you? He's asking what happens if you do not have a tenant for a month. I think we can go over that again. So we had said that you...
So we had said that if you don't have a tenant and you're registered in the MRI regime, then in that month where you don't have a tenant, you file a nil return.
Okay, yes, you file a nil return, Frederick. But my question, Karen, will be, well, I do not have a tenant, but then for some reason life just happens to me, and then I just forget to file the nil return. Does the penalty apply? I did not declare whether I had or I did not have.
Unfortunately, yes.
Unfortunately, yes. Okay,
Yeah.
okay. So I can see you, Evans. We have already answered your question. Your question is, what are the allowable expenses from the normal regime? Frederick, I can see you've asked another question. Do we have agents who can file them for me? Frederick is asking, do we have someone who can assist me? Maybe I have so much on my plate as someone who's doing other businesses. Maybe I'm employed, or I have just other things going on in my life, or I just want an expert. I just want help because maybe I'm not able to access, or I just do not understand the nitty-gritties, which is allowed. Yes, so they're asking, are we able to assist, or do we have someone who's able to assist our investors?
So at the end of the day, someone would like to offer those services to you so that it's just an added advantage. But currently at the moment, our capacity cannot allow for us to do that for all our investors.
Yes.
But of course, when you build capacity, then we'll get back to you. Yeah. But you can get a tax consultant who then helps you with these tax matters, so that at the end of the day you're not on the
You're not caught up.
Yes.
Uh-huh.
Yes.
Okay.
Is Sami back? I wish Sami
Yes,
was
Karen,
here.
I'm here, but please. Hi, Karen, you can hear me?
Yes, I can.
Yeah. Please allow me to join without my video. I'm experiencing power outage.
Okay,
at
no
my
problem,
place, so
Sami.
I'll just join with audio. Yes.
So Sami will be able to assist Sami will be able to get back and assist.
So Sami, one of our investors has asked, the question of, can I get an agent who can help me do this? Yeah, and
Yes.
I'm telling them maybe we can have like a side conversation so that we just know if we can get someone who can help them with it if they don't have a tax consultant yet.
Yeah. Sure, we can be of assistance to the few clients that would like to have a consultant on board. Maybe they can reach to us through you. Once they've firmed up their position.
Okay.
Yeah,
maybe
but we
Fred,
will be happy
can
to
have
assist
like
them.
a conversation after this.
Yes.
Yeah.
And for anyone else who has the same question or the same concerns, kindly contact Karen. Her email is just karen@savo.ke. Karen will help you. Karen is here for you. So there is someone else I can see on our live chat, Lorna. Thanks for joining. And Lorna asks, what happens if I receive rent in arrears? Say I receive the December rent and January rent in January. Like, my tenant for some reason did not pay, and maybe there were no measures to ensure that they paid. So in January I received, so for example, I had already decided they might not pay, and I declared nil and filed nil returns, and the money comes cumulatively in January. What do I do?
Sami, what would you advise?
In that case, that's a unique case in which you can even explain the position to the KRA. And it's something that the KRA are really understanding. So once you receive the rent in arrears, you will declare in the month in which you receive and make the payment. If in case it's queried, just have your documentation in place that this is what happened and this is the case, especially now with this issue of COVID. So the KRA are a bit understanding. But the only challenge is don't make it a habit. So once that happens, is try to have that conversation with your tenants and agree on a way forward, so that even if it means changing their deadlines or issues like that, so that it doesn't become an habit you're declaring in arrears. If it's a one-off, the KRA would be understanding.
Thanks, Sami. And then again, Savo promises that they will build in locations that are tenant viable.
Yes.
Yeah, so that no investor has to go through that.
And also in Savo, we guarantee your returns by the 10th. We have a process whereby I pay you as my investor, and then I'm left to collect from the tenant as the property manager. So it will not happen. Don't be afraid, it won't happen to you. Yes.
Yeah, thank God for lifestyle.
Yes. So we have Betty. Betty asks, Do I need to open a limited liability company and file tax with the company, or is it advisable to file with my individual PIN number? How many units computes a company in case I have less than 2?
In case you have less than 2,
Yes.
so you have 1.
Yes.
I think that's a choice, Betty. Some people prefer to have their investments like in a company, under a company name, and other people prefer to have their investments under their own names. So and there's no limit that as an individual you need to have this number of units, or as a company, these are the number of units you need to have in the minimum or the maximum. So I think it's a matter of choice. So if you choose to have them under Betty as an individual PIN holder, then it's still okay, you file it under Betty. If you have it under a company, then you file it as a corporate. Yeah. Even companies, some companies have only 1 unit, just because maybe you have other investments, or or it's a company, or it's a business that's buying units, something like that.
Yeah. So for clarity purposes, Karen, if you and I have a unit, we do not need to open a company to file just under the company. You can file this month. Can you file this month using your PIN, and then the next month I file under my PIN, like this? Because we own the unit together. Just for clarity, I were to be thinking, if I have a husband, my husband files this month, then I file the next month. Just for clarity.
Maybe Sammy, you can contribute to this, but I think that if the rent is split into 2, so the value of the unit is split into 2 people, the owners of the investment.
Okay.
So that means as the rent comes in, there is share.
Yes.
So that means Alice is getting 50% of the rent, I'm getting 50% of the rent. So at any given month, you're declaring the half that you're earning, and I'm declaring the half that I'm earning. Sammy, is that correct?
Karen, I think that's one of the avenues that you can exploit in terms of the declarations. But from a practical perspective, I would advise that it's much better to declare under, if it's a couple, to use one person's PIN for consistency and for ease of declaration, so that you don't have to be filing new returns or returns the 2 of you at a go. So I think it doesn't matter. For tax purposes, you can use one PIN, but for income distribution, you can distribute. That the carrier doesn't care how you do with the income thereafter, as long as they've gotten their tax.
Filing.
So you can pay the tax jointly under one person, then subdivide the income thereafter. Yes. And with respect to using a company in 1 month and using your own PIN in another month, one thing that we need to make clear is a company is a separate legal entity. So you and a company, you cannot mix your affairs. You are 2 different legal entities. So I think once you put the property in the company, it belongs to the company. You could be a shareholder there, but that property is under the company. And even if, for instance, there is stamp duty to be paid, all those statutory payments are borne by the company by virtue of owning it. So I think there needs to be legal distinction, and the choice of the vehicle to invest in depends on your preference, because there's an advantage of using your own PIN, and there's also an advantage of using a company PIN. So each one has its own privilege and advantages, and they have also their own disadvantages. So I think it depends with your choice of investment and how you plan for succession purposes. Because the other issues that you were thinking, maybe this property you want to, you're preparing an inheritance for your children. So it depends how you see that property. So that will inform how you invest that property. Yeah.
Okay, thank you, Sammy. I think you hit the nail on the head, because Frederick is also asking, because you've said there is the pros and the cons of using a company and also using an individual PIN. So he's asking, what is better? What do I use? Is it better for me to form a company, or is it better for me to use just my individual PIN for filing?
I think that's a bit difficult to answer in a very straightforward format. I think that is dependent on the individual, and I think maybe in case he requires clarification, we can assist him outside this forum, but it's something that is a bit detailed, that you need to analyze why you need to invest in a company, why you need to do in your PIN, because there are very key other factors that you need to consider. Are you a tax resident in Kenya? Like, what is the long-term goal of that property? So those are the kind of things that will inform the decision on whether to do it under individual PIN or to do it under a company. And the other things would be, do you own any other assets? So it's a very detailed analysis that needs to be done. We can't answer a yes or a no answer at this forum.
Okay, Sami. Thank you. But also the fact that we have committed to doing this is not our first session. So all this, we are having very deep conversations. We can take them down to other sessions and just talk about them in detail. Yes.
Like what would you advise an investor? Yes, for sure.
Okay.
For sure.
And then I can see Evans again. You've asked a very nice question. If I start receiving my 24K today, is it advisable to wait 12 months to register for MRI, or do I switch based on the projections?
You switch based on the projections. So you to be honest, paying MRI is a good thing.
Yeah.
So immediately you know you're earning 24K every month, so you know by the end of the year I need to have earned this.
Yes.
And you see, it's very easy for you to be able to explain to KRA that this month I didn't have a tenant, so that's why I haven't hit the 288K a year mark, you know, something like that.
Yes.
But immediately you start earning, you need to start paying.
Yes.
So that you don't have penalties. At the end of 6 months, you're not coming back and then to start asking, what do I need to do? What penalties am I gonna pay?
Yes.
You know,
Yes,
something like that.
Very, very educative. I think also in our next sessions we can do the projections of, if I'm in the old regime, what do I end up paying at the end of the year? But if I do it the monthly way, what do I pay? Just to see which one is better. If we're advising, let's go the MRI way, we're able to show you as our investors, this is the reason we're telling you to go the MRI way. Yes. Okay. So I can see you, Biseri, and she asks, what if the half of the rental is less than 24,000? You know, the way in Savo, just because we want to guarantee you as an investor, we are guaranteeing you passive rental income. So when a tenant leaves and I'm able to get a tenant for the next month, normally you would have earned the 24,000. But I have gotten your tenant for half the month, so you have just earned 12,000. So do you file nil, or do you get do I file nil, or do I tell KRA that this is what I just received?
Sami, what do you think? So for the people who come into the building for half months, that means if my projected rent for the month is 24K, then half of that month would be 12 Gs.
I think what happens for MRI is you do an annual projection. You do an annual projection. My rent is 24, so you will hit the target, or 25, so you know you will hit the target. So what transpires during the year has very little impact on that. So in a month you receive 12,000, you will still declare MRI on that 12, because your annual projections was that you will get to the limit. For instance, you can have 24,000, the age. You get 24 until November, you don't get a tenant in December. So you will still fall under MRI, and you can always explain your case that based on my projections at the beginning of the year, I was in this bracket. But what happened is I didn't get a tenant the last 1 month, and I would not have reversed. It's not possible to reverse and go back to the other regime. So the KRA have not been really aggressive on this one. So I think, in fact, KRA are more keen on MRI than guys shifting to the other old regime. So this is something that you just look at your annual projections and you make a decision, and you, even in a month where you have less rental income, you just continue the payment. Yeah. The other thing that I hope that's answered. The other thing that I want to make it clear is that even if you fall in the MRI regime, that bracket of 288 and 15 million, but you feel you prefer the other old regime, you can always opt out of the MRI. You opt out of the MRI and you go to the other regime. But the KRA want to release some regulations on with respect to the guidance on opting out, but nothing has been done so far. But from a practical perspective, is you don't have a choice to opt out within the year. You can only opt out before the beginning of a financial year. So let's say this is 2022, you've been in under MRI, but you want to opt out in 2023. You need to notify the commissioner maybe around September 2022 that from next year, January, I will not be doing MRI, but I'll be doing this regime. Then you explain yourself with that. Yeah, that's the catch. That's the catch basically. But from my years of experience, I've not seen a taxpayer shifting from MRI to the old regime. It's not, once you do even the projections for the next, you will see MRI is still the most favorable. You don't have the hassle of tracking your expenses. You don't have it simplifies your work, because if you have to go to the old regime, you need to make sure that every time you go to, let's say you have a tenant that has left, you are doing repairs, you have to track each and every invoice and make sure you have all the records in your file. The moment you miss one invoice, you cannot use that invoice as an expense. So, and the tax on the other side is 30%. So, and one thing that I would say, for instance, for most of your clients, those houses are still very new. There are no repairs being taking place. So I don't expect any expense. If there's any expense, it's a very minimal expense that if you deduct that expense from the income and do 30%, you're still paying more than someone who's paying 10%. So those are the kind of logics that we will look when going into the next session. Yeah, I think that's one thing that I wanted to make clear. The other thing that needs to come out clear is that MRI is a final tax. And what you mean by a final tax is once you pay 10%, you're not required to pay any other tax on that income. So let's say you've been paying 10% January to December. Then it comes to December, and that is your only income. You don't have any business, you don't have any employment income, you don't have any other income at all. You will file nil return at the end of the year because you've already declared your income monthly, you've already paid your taxes. So you just file nil return at the end of the year and you're done. The following year you proceed. So that's why we're saying it's a very simplified regime, and it's an easy way that anyone can adopt. I hope that's clear. You may proceed now, Karen.
Thank you, Sami. Thank you.
Thank you, Sami, for saying it's a final tax. I think that was very important for people to be able to understand. I can see Kezia. Kezia is asking, thank you, Kezia, for joining. She's asking, if our rental income is 24,000 and me and my husband split the rent, does that mean my rental income becomes less than the taxable amount? So me and you together, our rental income is equivalent to what can be taxed. No, but we decide as a way of maybe evasion, trying to be very cheeky, we decide we can split. It goes, because we have not bought the unit under a company, we just bought it as individuals. That is Alice and Karen. Is KRA keen about that? Will that be wrong?
So is this one unit?
Yes, it is one unit, but I have decided if it is sent to one person, it becomes 24,000. We need to pay on it, but I decide send Karen 12,000, send me 12,000. Then now all I need to do is declare, and then declare it at the end of the month, at the end of the year. Sorry.
But you see, you're not necessarily running away from the tax. You still pay it at the end of the year. But I think Sami answered that question and said that if it's me and you, okay, it's you and your husband,
yes,
and you decide you want, and you've bought a unit, yes, and don't get tempted to split the rent between the two of you. It's for consistency and even just to help carry with the tracking and all that, so that they're not on your neck. It's easier for one person to be the one who's filing for those taxes.
Okay.
Yeah. If it's me and you, say for example, okay, you know, the relationship between a husband and a wife are two different things. The relationship between you and a friend are, again, two different things.
Yes.
So if there's that issue of then whose unit is this? This unit is registered under two people. There's, you know, like there's all those issues.
It becomes questionable.
Yes, it becomes questionable. And maybe Sami, you can help here. So you are an investor. You've invested. Say, I, Karen, has invested with Alice, and So the owners of that unit are Alice and Karen, but Alice
Yes,
is the
yes.
only one who is filing and paying for MRI. Yeah.
So I think, Karen, I think that question it's something that rarely comes up, because it's one thing most couples normally prefer to declare under one person PIN, and even when they're separating, it doesn't get to the point where the point of separation is a determinant for tax purposes. Yeah, but in this case, if that's a determinant, it's a very tricky scenario, and I would not advise anyone to split, because one, if you look under the Income Tax Act, there's a provision that provides that, it's a separate topic, but it provides that where the woman is an employee, where the wife is an employee in a company where the husband controls a certain percentage, the wife's income can be declared as that, shall be considered to be that of the husband. Yeah. So in a way, it links the two. It doesn't, because that's why if you go even to the return at the end of the year, it's possible to declare the income of the wife and the husband under one return. Yeah, there's that provision. So I think such kind of issues those are the kind of the issues that were addressed. And in any event you split and you don't even declare your returns together at the end of the year, there's a provision under the Income Tax Act whereby the KRA can adjust a transaction if they deem that the transaction was done for tax avoidance purposes. So I think it's not advisable. There are very many ways in which KRA can come in and say, this transaction, they can even query, how was the investment done? When you purchase that unit for 2 million, 3 million, did you contribute equally at that point? They'll go back to look at your bank statement. Maybe you find the wife is the one who purchased the unit, but for purposes of, so I think it's one of the things that I will not encourage anyone to divide that income, because there are very many angles in which KRA can come back. So the best way is just declare under one person and just move on. I don't know if that addresses the concern.
Does. Thank you, Sami, for that. So, yes. I can see another question here. Christine Abisa asks, hi, Christine. She asks if she has a unit worth 17,000. Someone told her that she can pay 10% of 16, so she will exempt the service charge. She's asking, why can't she exempt management fee? But first you can clarify why she's not required to pay at this moment, because her monthly income, her monthly gross income is not 24,000 yet.
I think that answers the question of why she's not eligible to pay for MRI right now, just because she's earning 17,000. Okay, I anticipated the issue of service charge and management fees coming up as a question, like with this discussion.
Yes.
So the act clearly says you're supposed to pay 10% on your gross rent. Yes. So for me, if we're giving advice, if we are moving forward with this, then the advice is you need to pay, if your rent is 17, then you need to pay 10% on the 17.
Do not expense anything.
Do not expense anything.
Be it service charge, be it management fee, just on your gross.
Yes, but I don't know, Sami is here, so he can help us with that.
I think the issue is the Income Tax Act is very clear. You pay 10% on the gross rent receipt. So as long as you cannot remove a number, it's part of your gross rent. Yeah, it comes to your account as rent. So what you do with that later on doesn't matter. So I think that's very clear. If you get 17, let's assume that you see in this case, there's no debate first because that person doesn't qualify for MRI. But let's talk of a discussion where that person qualifies for MRI. The debate is, do you receive that as part of your rent? If the answer is yes, so there is no other deduction. But in the instance whereby you have your, that's what most landlords are doing nowadays. You have your rental house, but you've done the KPLC meter in the name of it's an independent meter where the tenant pays for himself or herself. So if the tenant is paying that expense for himself or herself, then that's not part of your rent. Yeah. So I think that needs to be clear. So the moment you receive that income, There's no way you can explain to the carrier that this is not my income, this is what. It's very difficult conversation that you don't want to get into because of 1,000 bob. Yeah. So I think it's the legal, the contractual agreement is also very key. The wording of that, what is your rent? So if you can distinguish rent from any other thing, this is my rent and this is what hits my account, then that will be very key. So it's something that maybe can be reviewed case by case depending on the tenancy agreement. But I would say from experience, you wouldn't deduct that service charge. It would be very difficult to justify.
Yeah, and you want to avoid like a lot of questions. So
So Christine, I hope it's clear that you're not yet eligible to file for your MRI monthly, as your gross rental income every month has not reached 24,000. But at the time you get there, kindly note that you cannot expense anything, be it service charge, be it management fee. And by the time you get there, we'll still be here to walk you through it. Back to Ivan's question, I think he still has a question. It's not clear for him, so he's still asking. So it is almost July. The year is almost over. So I begin my rental income. So let's say, for example, a project that is now ongoing just gets completed and I get my first rent, be it in the month of May. So the whole year I have not earned 288. I am not in the bracket. But for that month that my gross rent has moved from, let's say, 18,000, it is now at 24. I am still eligible to file the MRI that month. Or do I wait until July to just declare it alongside my other income from other sources? I think that is clearly his question, because he's saying, I have not, for the whole year, I have not earned 288. It has just come that a project or one of my sources has increased or moved to the next level.
So it's like you purchased this unit in July.
Yes.
You know, like, so you've become, the unit has started giving you income in July in this case. So for example, like our project, Skywalk. My perspective is because the 288 is for the year, then for that year you will not file for MRI. But Sami can advise.
Can take us through.
If you look at the provision of the Income Tax Act under Section 6A, it's very clear. It says that bracket of 288,000 and 15 million during a year of income. It doesn't talk of part of a year. It says during a year of income. So it's very clear that your projections is for an year. So the monthly breakdown is just to help you in arriving at your annual. But what you need to consider at the end of the day is that financial year. So if you don't fall within that during an year of income, you're not eligible for MRI. Unless the only circumstance where you can say you are eligible is in the previous year you qualified for that MRI, then in the next year now, maybe your tenant, you didn't have a tenant in the first 2 months, then in February you get a tenant, you will continue with MRI, and then your justification will be, last year I was within this MRI, and then tenant moved out, then in February I got another tenant, so I am still within that projection based on my prior year. So basically that's what comes in.
Sami, there's a question on what's the calendar year? Is it Jan to Dec? Can it be July to June next year?
Is it the calendar?
Okay.
The financial.
Okay, I think for this one now comes in with the vehicle that you've used to invest in the project. For individuals, yourself and I, the default financial year is January to December. You don't have a choice of changing. So your year end for individual, if it's Sami, it's Karen, your year runs from January to December. Or even if it's Evans, the year runs from January to December for individual. That's provided for under the Income Tax Act. But if it's a corporate body, a company now, or a company, you can choose to alter that date as long as it's a period of 12 months. So you can have a company year end running from February to January, March to April. So if it's a company and your year end is any other period other than December, you will use that period for purposes of projections. But for individuals, it's January to December.
Okay.
Yes.
Thank you so much, Sami, for the clarification. I think we are almost getting to winding up this session. It has been very informative. It has been, me myself, I'm also learning. I also didn't know that I need to do the projections. I thought it is very dependent on what I earn every month, but now I'm able to know that I need to do I need to do my own projections and know, despite whatever happens, was I still supposed to be in that bracket of 288? That is very great. That is great. I think we're coming to the end. We're coming to the end of this session. I don't know if there's anyone who still has a question or feels their concern has not been addressed. You can kindly drop us a comment, and then we can wind up and then book a next session for our investors so that the conversation just continues. Anything, Karen, to add before we wind up? You will give your remarks, and then Sami also will do the same, and then as we wait for their questions before we wind up.
Okay, we wanted to do like a brief snippet just to show you how to file, because
Yes.
you're wondering, okay, yeah.
We've done the theory. You want to see the practical.
So, what is it?
Yes.
Karen,
So I'll not
maybe I can just,
Yes?
I don't know, sorry for interrupting. Maybe I can just comment on one thing before you finalize. For individuals who in one way or another, companies in one way or another that have not complied with their taxes in the past, there's a program called the Voluntary Tax Disclosure that was introduced by the KRA. Yeah. And the first year of the program was last year, the year 2021, whereby if you did the declarations in the year 2021 for back taxes dating back to July 2015, and declare them, you were entitled to 100% waiver of penalties and interest. So the good thing is, now that you've brought this to the attention of most of your clients, that program is still running for the second year. But the only disadvantage in the second year is that if you declare your back taxes this year, you will be entitled to automatic waiver of 50% of the penalties and interest. So you can still disclose in case you acquired a unit in 2019 and you've never paid your taxes, and you're now thinking of being compliant, you can still do it now and get that 50% waiver. And if you do it in the next year, which is now 2023, that is the third and final year of the project, you will be entitled to a 25% waiver of the penalties and interest. So I think that's something that maybe even as the landlords now, your clients go back, they can evaluate whether there are any back taxes that they feel they're exposed, and they can take advantage of that program. I think that's something that maybe we can help them further in case there are anyone who will be interested in understanding the program. The good thing about the program is that once you take advantage, KRA will not come further to demand that tax in the future. It's something that is done and closed, and the eligibility for waiver penalty and interest is automatic because it's provided under the Income Tax Act. So I think that's something that maybe we can, some clients can consider going forward. Yeah, thanks, Karen.
Thank you, Sami. Thank you for bringing the VTDP program up, because it's a very good program for investors in Laser 90, Coral, those who have not been able to comply with just whatever is expected of them with KRA.
Yeah.
Like, feel free to reach out, feel free to ask whatever questions, because for us, we feel like it is our responsibility to ensure that, since you're promising that this needs to be as passive as it is, then KRA doesn't need to reach out to you 20 years down the line asking you did not pay me tax for a unit you bought in 2019, you know. So maybe you can reach out. Your relationship managers are available. I am available on email, on call. You can also reach out to your relationship managers on email or call, and we just take you through it just to help understand. Because then again, we have the statements of how we've been renting out the units all through the period. So then it's easy to just guide you through it.
Yeah.
So thank you, Sami, for bringing that up.
Yeah, and it is good that they have a waiver. Not all hope is lost. But from this survey we are conducting here, and 71% of them are saying that they find their monthly rental income. So I think it's a good job, Survey Rights.
Yeah,
Yes.
fair trumpet to all of you.
Yeah, good job.
Yeah. Yeah, so I think the last bit before we give our remarks and end the session is
Yes.
just to give a 20-second idea of how you're supposed to file this thing we're calling MRI. So I'll not actually file it, but I'll just take you through the process because it's a very easy process. You can even do it on your phone. So just one day on the 19th when you're ready. So now so of course you log in on iTax, you have your PIN, you have your password, you get to log in.
Yeah.
And then when you're on iTax, you'll go to returns and then file return. And a return, there's a tax obligation that you can pick. So there's something called income tax rental income. And then you say next. I hope all of you can be able to see this. So of course it's an original return, and then you put the period. So right now it's March. So it means I'm filing for February. So it's you can see it automatically fills for you, and then you just say next. All these other fields are not important, but you need to put in your total rental income. So if you put your total rental income, then it automatically populates for you and tells you what is your tax on rental income. And that's what you need to pay. The amount that it gives you there is what you need to pay. So after you have submitted, it will give you a certificate that then has a payment registration number that you use for payment. So assume we have the certificate we submitted and we have a certificate. So we'll come to payments. We'll come to payments. And then make payment. Payment and then payment registration. So you register first for the payment. So because this account is not registered for MRI, that's why we're not able to proceed. Yeah, but if you would have, if this account was registered for MRI, then you'd notice that here it would ask you what tax head to pick, and then as you proceed, so here the tax head would be its income tax. And then, so you can see income tax rental income is not here, but it should have been here if the tax head is registered. And then you pick what payment type and mode of payment you'd like to use to pay. So I think that's basically it. Yeah.
Thank you, Karen. Thank you so much for that. Before we wind up, I can still see some two questions that have come in. So Biseri is asking, what if I have decided to put my unit as an Airbnb? What is the difference in tax payment bits? So my unit is registered as a residential. It has a lease, it has a title, a sectional title to show it is a residential area. But instead I'm not going into the business of tenancy. I have decided to put a shop, an Airbnb. What difference now does it make in terms of tax?
Sammy, I hope you're around to just take us through that.
Yes, Karen. Let me just confirm if I got the question right. It's where it's a residential property, but is it the landlord who has converted to commercial, or it's the tenant who has converted to a commercial property?
The landlord themselves.
Okay. The landlord. In that case, whereby the landlord has converted his own or her own property to commercial, then it no longer qualifies for the residential rental income, because this is our own residential property. So it's very clear that this applies to individuals and corporate with the residential property. So that property has to be used for residential purposes, which is for use or occupation, basically for residential purposes. So I think that's very clear. Once you convert to commercial, you don't qualify. The other catch is you have your unit as an individual, as an investor. You've rented it out to Sami. Then Sami decides to convert my 1 bedroom to a shop. In that case, you as the investor, you don't have, you've rented out your residential property, but Sami has used for commercial. So it doesn't have any impact on you because that's a residential property. Unless if the entire property is converted to commercial, then you will by default not be under the residential regime. But if it's just one unit, the whole property is residential, but one tenant has decided to, the front part of his business is a shop, then he lives behind it. So that's an issue with the tenant. So it has nothing to do with you. Yeah, so that's something you can always justify. Yeah.
Okay.
Thank you.
Thank you, Sami, for that. I can see another question coming from Donna. Thanks, Donna, for joining. She's asking, what if I am non-Kenyan and I have invested in Kenya? So do I go about the process of getting a KRA PIN and then now file, or is there any exemption from me just by the virtue of being non-Kenyan but I have invested in Kenya and this is just required of me?
Sami?
Does it? I think one of the things that we need to make it clear first, at the moment for you to buy a property in Kenya, one of the requirements is you need to have a KRA PIN. So even if you are a non-Kenyan, the moment you come to Kenya, you will register for a PIN for you to acquire that property, because you will never be able to sign that lease agreement under your name if you don't have that PIN. So and the moment you register for that PIN, then it comes to the issue, are you resident in Kenya? Yeah, you can have a PIN, but you are not a tax resident in Kenya. So the moment you have that discussion and you are not a resident in Kenya, then you don't qualify for MRI, because MRI is for tax residents. It's for a resident person. So I think that's where the discussion is. If you are not a resident, and then there are discussions about the residency. There are tests to determine if a person is a resident. So that's a detailed discussion to determine the residency of a person or a corporate body. So there are different tests for that. I think that's the easiest way of explaining that question. I hope that will be able to help Donna in making a decision, because I think the way the amendment that came to the Tax Procedures Act requiring for individuals to have, for any investor to, when you're coming, one of the requirements when you're investing is to have a PIN. So I think that brings the catch now to everyone. Yeah.
So some of our investors are from diaspora, and some are actually residents and others are non-residents. So what would you tell the investors who are non-residents? What do they need to do?
The ones who are non-resident, but they have PINs, correct?
Yes.
Because I think that's one of the requirements. So they will not fall under the residential rental income regime, but they'll pay their taxes at the rate of 30%. So I think, that's what basically would happen for them. They will not fall under the MRI, but they will fall under the 30% regime.
That's quite informative. So I think we've gotten to the end of this informative session. It has been great doing it next to these great people. So I think, Karen, it's your time for just a few remarks as we close and wind up.
I think sometimes you can get lost in the moment and you forget the obligations that you have as an individual. But this is I like this initiative because it's very, very good for our investors, and it actually keeps you on the know. if you know anyone, whether you have property with us or not with us, this is a session for everyone, so that everyone is just in compliance with what KRA requires. Because then again, it's never a pretty picture when they are at your door and asking you for funds from 3 years ago. So for me, I think let's adhere. Let's take this into action. Let's make it part of our monthly processes. Let's make it part of our investment process.
Yes.
Just to know and understand what are the requirements of what is required of me as I take this investment.
Yeah.
And I think that is very, very important.
Okay.
Yeah.
Thank you so much, Karen. Thank you for joining us. Sammy, on the other end, we are very grateful. You've been of so much assistance. You've answered, you've restored clarity. And thank you so much for walking this with us. Sammy, kindly allow us to always contact you in case of anything, because after this, we're expecting questions and inquiries from our investors. Thank you so much, everyone, for joining us tonight. We are happy to have had you, to just open our arms and to tell you we are ready to walk you through this journey. We're ready to complete your investment journey, and we're ready to just educate you and to continue letting you know what the government requires of you, so that you do not fall on the wrong side of the law. So we will keep you updated on when, how often we will be doing this, on the timelines and everything that you need to know. So you're welcome to ask us any questions that you might have. That is on email and on call. We are here for you. Have a great evening. This was nice. Bye.
Bye.